Mortgage rates have dropped. How low will they go? Well, it's a fact. It's all over the media. It's all over social media, national media, CNBC, everywhere. Mortgage rates have dropped. Mortgage rates have dropped. Yes, it's true. They dropped last week by roughly 1/4 to 0.5%. Could be more, could be less, depending on the scenario. But here's what you have to know that nobody's really saying right now. Interest rates change every day throughout the day. And yes, we did have a great rally last week. But this week, the market is resetting. Now, are they back to where they were going into last week? They're heading in that direction. And this is what's so important because the news is outdated, guys. It just is. Every day, these mortgage rates change. A great way to kind of just track what is happening is following the yield on the 10-year Treasury. When you see that yield going down, that probably means that interest rates are looking better. It's not a direct correlation, but for the average person, it's a great, easy yield and an easy thing to monitor mortgage rates. If you look at the 10-year yield today, you're going to see that that yield is moving up, which is bad for mortgage rates. That means mortgage rates are moving up. The point here is that when you listen to the news and you listen to what's on social media, most of the time, it's outdated. The good news is rates are trending down, but they're not going to just go straight down. It's going to be like this, which is why it's so important to have discussions. If you're looking to buy a home, talk with a lender, get pre-qualified, look at different rate options and what that really does to your payment. So when you're out there shopping, you know, hey, interest rates are a little bit better. I really like this house. My goodness, this could be a great time for me to pull the trigger and write an offer on this house because interest rates are down 1/4 or 1/2 or whatever they happen to be from when you first got pre-qualified. In our world, we use an analysis where we can show you a side-by-side comparison of what interest rate does to your payment. So for example, if you take out a $400,000 loan and the interest rate when you get pre-qualified is 7%, and before you go under contract or right when you go under contract, let's say interest rates are now 0.5% lower or better. In that scenario, for a $400,000 loan, you would save roughly $134 a month. Okay, well, that's important to know. But the thing is, it doesn't always mean that you're going to get that rate because you may not be going under contract. You may not be in a position to lock or secure that interest rate. And this is what I want to share today is just, it's great. And trust me, I'm in the mortgage business and been here for 28 years. I've seen it all kinds of cycles, all kinds of volatility. There is no difference here. So when you hear interest rates are down, know that they are for the day. They have trended there. It doesn't mean they're not going to pop back up, but it doesn't mean that they're not going to go down again. It's going to be choppy. Now, why? When things in the global economies start to get stressed, unemployment increases, inflation increases, cost of good increases. When the bad stuff happens out in the world, it generally bodes well for mortgage rates. If we look at it just from a historical perspective, this is why mortgage rates got as low as they did back in the pandemic, because the world went on shutdown and the governments across the world were like, oh my gosh, we got to do something. So they did. In the U.S., the Fed drops the Fed funds rate. We start pushing money into the economy to keep it going. Well, the pandemic itself wasn't a good thing. And that's how the government responded. The bottom line is, what does it mean for you? That's what you want to know. If you're getting pre-qualified today, 6.5% or 6% interest rate, what does that mean to you from dollars every single month out of your pocket? And I think if you have that information, it helps you move through that home shopping process with more knowledge and the ability to strike and write that offer when you feel comfortable, or maybe you can increase your purchase price now. So let's say interest rates drop to that 6.5% on the day you're ready to lock, or you're out shopping and you know rates are trending down. Maybe you can increase that purchase price a little bit, still be comfortable with your payment. So many variables go into this discussion. It's not just, hey, interest rates are down. And oh, by the way, if you currently own a home, and maybe you're thinking about refinancing, I highly recommend that you talk with your lending partner. Make sure that you are ready to go. What does it look like? What's your hit price? When interest rates get back down there again and they stay there, it's going to be pandemonium. because we have this pent-up demand for a lot of people out there to refinance, whether it's to refinance to lower rate, to refinance to maybe eliminate mortgage insurance, refinance to maybe tap into some of that equity and pay off high interest credit card debt, cash flow, those types of scenarios. It's there. We have all these people waiting. So get in line now. And if you are interested in knowing more about your particular scenario, so you know what that strike rate is, so we can be there and help you secure it, reach out. But overall, guys, it's a great time to buy or refinance because we are starting finally to see a little bit of reprieve in the mortgage rate front. If you're interested in looking at numbers specific to your situation, again, we lend in 45 states, and we would love to provide you the data to help you decide whether it's a good time for you to buy or refinance now. Give us a call, 480-725-0150, or if it's more convenient, schedule a call with us via our schedule link in the comments below. If you want to keep up to speed on what's happening with mortgages, please subscribe to this channel.